All righty. Welcome back to Smart Investing Show. This is the part now we talk about financial planning. For that, we have Harrison Johnson, our CFP, show up here and talk about financial planning. And Harrison, I am so excited about this. I see new tax rules for tips and overtime. Does this mean I can get free overtime? I'll pay less taxes? Is that going to help me?
Well, you don't get overtime, or tips.
Nothing ever helps me. Nothing. All right, what do we got?
So with the tax bill that passed a couple weeks ago, part of it was this conversation on no tax on tips or overtime. So what it is this applies from right now, starting January 1st of 2025, and then going through 2028, so 4 tax years, up to $25,000 of tip income or $12,500 of overtime income can be excluded from federal income taxes, and there's an AGI limit on that. It starts to phase out at $150,000 of income if you're single, or $300,000 of income if you're married. So that's what we've heard in a nutshell, but we've got some details that we can get into it. So on the tip side, kind of what you're just talking about, Brent, is tips have to be customary in that line of work for you to actually deduct it. So we can't go in and call our income tip income and have it be tax-free. So it's for people who customarily get paid tips, like hairdressers or bartenders or servers or things like that. So that's the thing on the tip. And then there's some caveats in the overtime part of it that I think is really interesting. So again, it's $12,500 of overtime, but the way that it works is the tax-free portion of it is only the actual premium you get on your overtime. So for example, overtime might be time and a half. So if you make $20 an hour, then your overtime pay is $30 an hour. The tax-free portion is only that extra $10 that you get, not the full, income that you have that's actually overtime.
I think myself and many other people thought the whole thing was going to be tax-free, but you're saying, you better say it again, because
that's a huge part of it. And there's also another big part of it as well. But again, the tax-free portion is only the actual overtime part of it. So again, if you make $20 an hour and your overtime pay is $30 an hour, only that extra $10 is actually tax-free. That $20 that you get is still taxable on all levels. The second part of it is this is a federal law. In California, there's a lot of different ways to qualify for overtime. Working more than 8 hours in a day, working 12 hours in a day, working 7 days in a row. But the overtime, for it to be considered tax-free on the federal side, the definition is if you work more than 40 hours a week, only that is overtime. So working more than 8 hours in a day, if you're not over 40 hours in the week, then it's not tax-free.
That's very helpful, because I was thinking what could happen is, as an employee, like they leave early one day. Mm-hmm. They leave, I only work 6 hours a day. Come back the next day, well, I'm going to work 10 hours and get paid overtime. But you can't do that. It's got to be 40 hours for the whole week.
Correct. Now, as the employer, so you're an employer, right. So if employees did that, the employer is still responsible, if you're in California, to pay that overtime, but the employee then would not receive it tax-free unless, again, it's, they have to work more than 40 hours in a week for those extra hours to be tax-free, and it's only the premium that they get in addition to the regular hourly wage for it to be tax-free.
And for the employer, this really doesn't hurt the employer, because they still get the same deduction for it.
Yeah. So the employer doesn't notice anything different. W-2s are probably going to be looking a little bit different, but that's more of a payroll thing. And then employees who have tips or overtime, I think it's going to be something that they file on their tax return to say, this is the amount of the overtime I had, or this is the amount of tip income I have. And it's almost like an above the line deduction on their own personal tax return. So for the employer, whatever you pay your employees, payroll taxes, wages, all that still is deductible the same way. So this is only influencing employees. But again, it's not like all your tip income is now tax-free, all of your overtime is now tax-free. It's got to fall in these parameters. And in addition to that, this is only a federal thing. So you're still paying state income taxes, you're still paying Social Security taxes, Medicare taxes. In California, we have disability taxes, so all that still applies. It's just federal income taxes on certain overtime, and if you're actually qualified to get tip income.
We talked about this last week with the one big beautiful bill, and some of my concerns is so many hands in the pot. It really kind of starts to, I think, reduce the intended benefit. And my concern here is this is just so complicated. Who is going to have to be the one that deciphers what is actually going to be tax-free? Because if you have on your W-2, let's say, right, where it says overtime pay. In California, your overtime pay, I believe when we produce our W-2s or we produce our, weekly paychecks, pay stubs for people, it just says overtime pay. Regardless of if it was 40 hours a week or 42 hours a week, if somebody worked more than 8 hours a day, it still shows up as overtime pay. Who then is going to go through and be like, oh, no, that week they worked 10 hours that day, but they didn't hit the 40 hours that week. They only hit, 38 hours that week, even though it says overtime pay. That isn't necessarily constituted as that tax-free portion. Who's going to do that?
QuickBooks. I don't know.
I mean, this legislation is so complicated that I don't know how in the world we're going to actually be able to decipher what is going to be eligible for these tax benefits, especially in a state like California. If your state law differs from the federal law, good luck.
Yeah, it's going to be interesting because, right now, the state of California says if they work over this amount of time, it's overtime. You get time and a half and then up to double time, depending on, how many hours in a day and everything. But all of that is included in, your box one on your W-2 and wages and, W-2 compensation. So now there has to be a separate little carve out where, okay, well, you got paid that, but then of that, how much is considered overtime as, is according to Section 7 of the Fair Labor Standards Act. So there has to be, broken out in that way. And it's really kind of interesting because this is active right now. So as of 2025, so, payroll providers, I'm sure, are scrambling to figure out how they can handle this, especially for income that's already been paid for the first 6 months of the year.
I mean, my concern here is I think the benefits that were produced by all this complexity is so small, and it comes potentially at the cost of, raising the debt, raising the deficit. And I don't know if the benefits, since they're so complicated, are going to long-term be worth it. I mean, we'll have to, I guess, see, but I definitely have my concerns around the complexities here.
It's complex, and I think part of it, too, is, this was really in the campaign trail. No taxes on Social Security, tips, overtime, and then looking at the details, it's not quite as straightforward as maybe a lot of people were hoping for.
Yeah, I think it's one of those sayings. It's good, but not as good as you expected, as you heard. And you kind of break it down for people. And again, I mean, you're still getting some money tax-free.
Yeah, taxes are not increasing.
Yeah,
it's
not
just
increasing.
You're,
and again, if you work more overtime, it's just, you will get some tax benefits on.
Not if you don't know how to file properly because it's so complicated.
Yeah, I'm not sure how difficult it's actually going to be. We'll see. I'm hoping it's not that difficult.
I'm sure that the payroll providers might have to carve out like overtime.
Right.
Qualified federal overtime.
I think that's what it's
going to
be.
fall on them, and I think
it's
that's
going to be.
rough.
Yeah, they're going to have a separate box to say, okay, you made $60,000, but then an extra $5,000 of it was overtime. Subject to those rules, so that's deductible on your taxes.
Yeah,
essentially.
It's very, very tough for the small business. Has maybe one employee, they do the payroll themselves. They got to get QuickBooks. They got to do something because there's so many rooms for error. It sounds like.
Oh yeah. So. Yeah, we'll see how it shakes out. But those are the rules.
Okay.
It's not, as simple as we thought. I was reading this. I was like, oh, wow, this is a little bit more complicated than I thought it would be.
All right, Harrison, next week your goal is to come back with something for me that I can save taxes on.
Well, you're gone, so.
Oh, okay. Well, I guess you're off the hook.
I'll see you next week. Yeah.
Well, Harrison, thank you very much. That's great information
guys.
as usual. All righty. Again, that's Harrison Johnson. He is our CFP, our financial planner. He's a fee-based planner here at Wilsey Asset Management. He doesn't try to sell you annuities or life insurance. Really sits down, very knowledgeable guy. You hear him every week here on the show talking about different things. You want a free consultation with him, give him a call at the office, 858-224-0004. Again, it's 858-224-0004. Or go to the website, smartinvesting2000.com. Again, that's smartinvesting2000.com. And if you have a financial planner now, I encourage you to give him a call, sit down, and compare your financial plan to what his financial plan is. I'm very confident you're going to say, like, wow, he's doing things that my guy didn't even think about.
Yeah, no, it's very in-depth, very thorough, and, I think a lot of people that work with him really, really enjoy it.
Yeah, and he's very, very knowledgeable. I mean, he spends, and here's an example. You go to a guy that manages your money, and he's a financial planner. He's got to spend time understanding financial planning and the investments, and we spend all our time doing the investment part. Harrison, he just spends all his time on financial planning, taxes, estate planning, all this other things. He doesn't have to worry about the investment part because that's what we do. So that's why that's the advantage. that we have. And he's here at Wilsey Asset Management. It's a fee-based planner, so it's not going to be any commissions or anything of that nature.